What if you could build a portfolio that quietly generates income for you every single quarter without the stress of chasing meme stocks, timing the market, or gambling on the next big thing? What if the key to financial freedom wasn't hidden in complicated trading strategies or secret algorithms, but rather in something far simpler? A well-chosen dividend ETF that rewards patience and consistency? Enter SCHD, the Schwab U.S. Dividend Equity ETF. It's not flashy. It won't make headlines for overnight gains. But what it offers is far more valuable: reliability, growth, and a blueprint for building real wealth over time. Now imagine investing in SCHD at 3 different levels. What happens if you put in $1,000? What if you step it up to $10,000? Or go all in with $100,000? At first glance, it might seem like the only difference is the number of zeros. But in reality, each amount unlocks a vastly different financial experience. From learning the discipline of investing with just a small stake, to watching dividend income transform into a monthly paycheck, the journey looks radically different depending on how much you start with. In this breakdown, we'll dive deep into each scenario, analyzing how SCHD performs, how income scales, and most importantly, how even modest beginnings can evolve into powerful financial engines. Whether you're just starting your investment journey or looking to fine-tune your passive income strategy, this story reveals what truly happens when you commit capital to a proven dividend ETF. The results might surprise you, and they might just change how you think about building wealth forever. Welcome to WealthEchelon, your go-to spot for smart investing, in-depth ETF insights, and book reviews that help you build wealth. On this channel, we explore everything from the best investment strategies to the latest trends in ETFs, and provide valuable takeaways from books that can transform your financial journey. Whether you're a beginner or an experienced investor, our goal is to give you the knowledge you need to make informed decisions and grow your wealth. If you're ready to elevate your financial game, hit that subscribe button, and don't forget to turn on the bell for updates on all our latest content. Introduction to SCHD, Why Investors Flock to It. The Schwab U.S. Dividend Equity ETF, better known by its ticker symbol SCHD, has become a powerhouse in the world of dividend investing. As market volatility, inflation concerns, and uncertain economic conditions continue to shape investor behavior, many are turning away from speculative assets and instead embracing strategies that emphasize stability, cash flow, and quality. SCHD fits that mold perfectly, and it has built a devoted following among both retail and institutional investors looking for a dependable way to grow wealth over the long term. What makes SCHD so attractive? At its core, SCHD is designed to provide exposure to 100 high dividend yielding U.S. stocks selected for their fundamental strength. But unlike traditional high-yield funds that may prioritize income over quality, SCHD filters its holdings through a rigorous set of financial metrics. This includes return on equity, dividend growth history, free cash flow to debt ratio, and dividend yield. These screens ensure that the fund doesn't just chase yield, but instead focuses on companies with a proven ability to generate profits and sustain dividend payments, even during tough economic times. This strategy results in a portfolio that is heavily weighted toward large, well-established U.S. companies. Names like PepsiCo, Coca-Cola, Verizon, Texas Instruments, and Home Depot frequently appear among SCHD's top holdings. These are businesses with wide moats, stable revenue streams, and long-standing reputations for rewarding shareholders. That makes SCHD ideal not just for retirees seeking steady income, but also for younger investors who want exposure to reliable compounding machines that can anchor their portfolios through different market cycles. It's also important to highlight SCHD's payout structure. The fund distributes dividends quarterly, making it an appealing choice for income-focused investors who want predictable cash flow. Whether you're reinvesting those dividends for faster compounding or using them to fund living expenses, SCHD delivers a consistent stream that can grow year over year thanks to dividend increases by underlying companies. Moreover, SCHD is extremely easy to access. As a publicly traded ETF, it can be bought or sold anytime the market is open, offering liquidity that rivals individual stocks. There are no investment minimums beyond the cost of a single share, making it accessible to small investors and those with large portfolios alike. It's also eligible for most tax-advantaged accounts like IRAs and Roth IRAs, which can amplify its long-term tax efficiency depending on how it's used. For conservative investors, SCHD acts as a safe haven. For growth-minded investors, it offers steady, compounding returns. For retirees, it provides dependable income. And for beginners, it serves as a perfect starting point. Simple, diversified, and time-tested. No matter where you are in your investing journey, SCHD can play a central role in helping you meet your financial goals. So what does it look like when different amounts are invested in SCHD? How much difference does your starting capital actually make? Can you still build wealth starting small, or is the real advantage reserved for those with deeper pockets? In the sections ahead, we'll explore 3 real-world scenarios: investing $1,000, $10,000, and $100,000 into SCHD, and we'll walk through what happened in each case over time. Through this comparison, you'll see how SCHD scales with capital, how dividends evolve, and why consistent investing can make even small contributions powerful in the long run. The $1,000 investment, building the habit, not the wealth. A $1,000 investment in SCHD is often the starting point for a new investor. It's the kind of amount a college student or someone new to the workforce might allocate after saving up for a few months. With this amount, the goal is rarely to get rich overnight. Instead, it's about developing the habit of investing, learning how markets move, and experiencing the benefits of compounding on a small scale. Let's assume that SCHD provides an average annual return of around 9%, a realistic number based on historical performance when combining price appreciation and dividend reinvestment. In the first year, a $1,000 investment would grow to $1,090. Add in the effect of quarterly dividends, and perhaps it inches closer to $1,100. It doesn't sound like much, but this early stage isn't about the absolute return. It's about getting familiar with the process. The dividends from a $1,000 investment might yield around $35 to $40 a year at SCHD's typical 3.5 to 4% yield. It's not enough to change your life, but reinvested, these small dividends start a snowball effect. After a decade, assuming continuous reinvestment in similar average returns, the $1,000 could grow to roughly $2,400 to $2,500. Not earth-shattering, but definitely more than keeping it in a savings account. Psychologically, this kind of investment teaches discipline. Watching the market's ups and downs with a small stake helps build emotional resilience. You learn not to panic sell during market corrections and understand the importance of long-term holding. This phase is less about wealth creation and more about investor education and behavioral training. The $10,000 investment, the serious beginning of passive income. Now let's scale things up. With a $10,000 investment in SCHD, we enter the realm of meaningful passive income and significant capital appreciation. At this level, you're no longer just experimenting. You're building a genuine foundation for future financial stability. With the same average annual return of 9%, your portfolio grows to $10,900 in year one. Over 10 years, that $10,000 could double or even more, reaching approximately $24,000 to $26,000 with consistent reinvestment. More importantly, the dividends now become more noticeable, yielding about $350 to $400 per year, or roughly $30 to $35 per month. That's enough to cover small monthly bills, reinvest into other opportunities, or pad your emergency fund. The psychological benefits also increase. Watching your portfolio generate consistent, tangible income makes the abstract concept of investing very real. It builds confidence. You begin to understand how wealth scales and how reinvesting dividends turns your portfolio into a compounding machine. At this level, some investors begin exploring tax efficiency strategies, like holding SCHD in a Roth IRA to ensure those dividends grow and compound tax-free. Others may consider monthly contribution plans to build on that $10,000 base, converting a lump sum investment into an ongoing habit. SCHD's quarterly dividends, combined with its low turnover and diversified nature, reduce the stress associated with market volatility. A $10,000 investment helps you stay committed during downturns because the passive income and future potential are now large enough to matter. The $100,000 investment, financial freedom in action. A $100,000 investment in SCHD is where everything changes. Now we're talking about a legitimate income-producing asset capable of supplementing or even replacing portions of your salary. At a 3.5 to 4% yield, this portfolio generates $3,500 to $4,000 in annual dividends, close to $300 to $350 per month. This kind of income could cover rent in smaller cities, pay for groceries, or allow for leisure activities without touching the principal. It's at this point that SCHD moves from being just an investment to becoming a tool for financial independence. With average annual returns of 9%, the $100,000 grows to roughly $240,000 to $260,000 over a decade if dividends are reinvested. At that size, the portfolio begins to throw off $8,000 to $10,000 in yearly dividends, approaching the level where you could live frugally off the income alone, especially in retirement or in countries with lower costs of living. Moreover, large-scale investing opens new doors. You start optimizing around risk management, income reliability, and perhaps integrating other dividend-focused ETFs or REITs for further diversification. SCHD, thanks to its low volatility and emphasis on quality companies, serves as a core holding even for larger portfolios. One of the key advantages of investing at this scale is peace of mind. Your money is working for you, growing even while you sleep. Market dips become opportunities instead of threats, because even if SCHD drops by 10 to 15% in a correction, you're still receiving reliable dividend income from companies that historically continue paying through downturns. Emotionally, it's easier to stay calm with a well-built portfolio anchored by something as consistent as SCHD. You see the bigger picture and realize that wealth is a long game. This is where the psychology of abundance starts replacing the fear of market volatility. The takeaway: amount matters, but consistency wins. So what really happens when you invest $1,000 versus $10,000 versus $100,000 in SCHD? The answer is multifaceted. The dollar amount certainly affects your potential income in compounding speed. Larger investments generate more dividends, more growth, and more financial freedom in less time. But beyond the numbers, the investment experience also matures with the capital. With $1,000, the lesson is discipline. You're planting a seed and learning the basics of market behavior. With $10,000, you start to feel the power of dividends and realize how reinvestment fuels real growth. At $100,000, investing shifts from being a financial tool to a potential lifestyle enabler, one that can generate meaningful income, provide freedom, and protect wealth. However, the most important variable isn't the starting amount, it's consistency. An investor who begins with $1,000 and contributes $500 monthly will eventually surpass someone who invests $10,000 once and stops. SCHD rewards long-term thinking, patience, and the habit of reinvesting. It's not about timing the market or picking the next big stock. It's about letting quality dividends compound over time. SCHD represents a unique combination of stability, income, and growth. Whether you're just getting started with $1,000 or managing six-figure sums, this ETF can play a central role in your journey toward financial independence. In a world of hype-driven meme stocks and speculative crypto plays, SCHD is a reminder that slow, steady, and smart investing still wins the race. Thank you for watching WealthEchelon. We hope you found valuable insights that will help you on your investing journey. If you enjoyed the video, make sure to hit the like button, subscribe, and turn on the notification bell so you never miss an update. Keep building your wealth, and we'll see you in the next video. Don't forget to check out our other videos for more investing tips, ETF strategies, and book reviews to continue growing your financial knowledge.